Let's talk about these markets here. We've been swinging between gains and losses all day. We've got a little bit of a lift here on the back of some of that CPI data. The market's trying to discount inflation, the jobs market, and what the Fed might do before. Plus, we got a ton of earnings. So let's check in with Rebecca Walser, president of Walser Wealth Management. She joins us live here in our Bloomberg Interactive Broker Studio. Rebecca, so many data points out there from earnings. We're just kind of getting through the earnings season, plus a lot of economic data here. What are the conversations you're having with your clients these days?
You know, I think that they're a little bit nervous at this volatility. We've had 3 solid years in a row, 23, 24, 25. And, AI last year seemed like, God's gift to every company that ever said, hey, we got an AI partnership going on. So they maybe expected that. It's been nothing but volatile. So we started the year out saying, hey, we expect a 5 to even 10% pullback Q1, Q2 to be choppy. And we think that the back end of the year, Q3, Q4 is actually going to give us some positive momentum. But I don't expect anything like we saw last year. Maybe 5 to 10% total gains this year on the S&P is where we're thinking.
So last year, AI was God's gift to every sector. And this year, it's scaring everyone. I mean, it's just kind of a wave of paranoia through the entire economy.
Yeah.
How nervous are your clients about what we're seeing when it comes to AI's ability to disrupt the economy now?
I mean, I think it's just emotional pressure, right? It's like, wow, you can look at all the software routes and say, oh my gosh, should I be selling? Should I be selling? And yet we're looking at Intuit as like, well, this is 50% off all-time highs. It still has 40% EPS and net income growth. They've got a partnership with OpenAI. They're trying to make sure that they are a relevant player as AI takes over. And so I think that certainly software has been totally oversold, as financial sectors, some financial stocks as well, I think this week. The truth is, let's be honest, the truth is AI is going to be disruptive. It's going to disrupt the way we do business right now, but it's not tomorrow. And so I think this is just being a hyper emotional overselling into the start of every sector. We saw it branch out, and let's be honest, it's hard to say that's wrong when it's not technically wrong in the long term, but it's just wrong for right now.
Given that there's some volatility, particularly in some of the names that have been working so well, like some of the software names, is there people want to talk about fixed income a little bit more this year? I mean, fixed income performed really well in 2025. How about in 26?
Yeah, it was interesting. I was looking at my little portal that I look at for all the things, and everything was red, including the yields on bonds. I'm like, even the yields are depressed. This doesn't make sense. Normally, we would see a shift right from equities, and we'd see an increase buying into bonds, which would make the yields go up because the demand would go up. But everything was depressed, and so I do think that always when you have people that are retiring, they want to know where their yield is coming from, where is the cash flow coming from, and equities going up all the time and making that a play of capital appreciation is great, but that doesn't give me yield. So certainly we've seen a good rotation into value stocks and dividend payers, and that should remain for all retirees. But I think overall there's just so much. This is behavioral finance 101. We have to really get into the economics of people just selling with the crowd. Mm-hmm. I do a weekly update to my client base every week, kind of letting them know this is what's happening. Let's keep our faculties and our wits about us. Let's not follow the crowd. The crowd is usually not the right answer all the time. And so let's just grin and bear, and let's see what the real technical and fundamentals are telling us, and then we'll make decisions. And I always say to them, listen, if you are getting nervous as you watch the crowd, then maybe your risk tolerances are not set correctly, and we need to relook at them. And people always want to be risky as the market's doing well, but the second they see, oh my gosh, selling pressure, I'm not as risky as I thought I was, and it's like, okay, let's reassess this.
So if they're risk averse, are they looking to buy gold at these levels? I mean, gold is now at $100, $5,031. I don't know why I tried to say it is $1,500. That was
you wanted it to be 5,100 something.
Yeah, pretty much. So, are they asking a lot of questions about gold, and not necessarily getting in at these levels, but increasing their exposure slowly?
Absolutely. We've been really big gold and silver bugs since 2020. We saw the writing on the wall with the world central banks printing, stimulating. So we knew that the commodities were going to really do well. They've done really well since 2020. We've been a long hold position for them. So I do have people all the time ask me, Rebecca, is it too late to buy gold and silver? And one thing I remind people of is there's a lot of analysis out there that really shows with how much we've inflated our paper currency, gold could be as valuable as $20-something thousand a troy ounce. down. So I don't think we're anywhere near the top. I don't know that it will go. The parabolic moves are what concerns me, Scarlett. I don't like to see it go from 47 to 49 to 54. And I told my clients, look, this went parabolically up. So what should we expect? Because there was no support established, it's going to come parabolically down. And that's exactly what happened. And then you see all the financial media. I literally got an invitation the very next day after that happened to a podcast that said gold is a terrible hedge against inflation. And I'm just like, okay, here we go. Here we go. So you're going to see the financial media turn negative and not really but the truth is that the central bank moves of the world, the moving from fiat to stable coins and digitization, the blockchain, that is happening, and that is going to make gold and silver a long-term hold. Yes.
Yeah, very good. Rebecca, thank you so much. We really appreciate it. Rebecca Walser, President, Walser Wealth Management, joining us live here in our Bloomberg Interactive Broker Studio, getting a sense of these markets.